Well, it is something of another merger Monday here. We've had a few deals. Celgene making it official, announcing it'll buy Juno Therapeutics. That's $9 billion, $87 a share, sending Juno soaring this morning, up nearly 30% in the pre-market. And AIG has come up with an announcement of their own, plans to acquire a Bermuda-based insurance company, $5.6 billion deal there. It reverses the post-financial crisis trend of getting smaller for AIG. We're joined by Citi Private Bank Global Head of Investments, David Bailyn, is with us. So, it's one of the things John and I were talking about earlier, David, is that after tax reform, and maybe that's not the only factor, but after that, we do start to see more companies saying, you know what, I got a lot of dough here. Maybe I'll buy somebody else. What do you make of the trends?
Well, I think this is going to continue for some time to come.
Yeah.
The first 9 months of last year saw a lot of pharmaceutical mega transactions. They quieted it down at the end of the year, and now they're picking back up. And this is indicative of the new tax policy, but it's also indicative of the fact that companies are looking for earnings and synergies that are going to drive costs down and margins up in this environment.
So, do you see any possibility that foreign companies now, with rates lower here in the U.S., 21%, want to come in and buy assets in the United States?
I think so, but I think you're going to see more regional mergers than you are these sort of mega international transactions. So if you take a look in Europe, you would expect a similar trend to the one in the U.S., where borrowing rates are ridiculously low and companies can do transactions there. But in general, the tax bill does make the U.S. more attractive as a place to put down roots, and so you would expect to see that.
David, from a Citi standpoint, you look at the tax bill and the economy, I'm sure, as a positive right now. But then you see this government shutdown on the other side, which could potentially derail it. Do you think this could have enough behind it, or if it drags on enough to derail the economic expansion we're seeing?
Not at all. It was interesting. We did a survey for our clients. We're asking similar questions about a whole variety of world events. And we've looked at 21 of them, and this would be a minor one. And if you do, basically after 30 days, no market impact. And after 90 days, markets go back in the direction that they were going to in general. So the answer in this case is very small.
What are those events that rank high on that list? You say you look at 21 events. So,
well, look at Brexit. The recent scares in North Korea. With these are bigger events than our government shutdown and the right now for the moment the closure of parks and
the
museums.
event that would rank high would be a debt ceiling crisis. And what worries me about what's happening right now with the shutdown is there is a debt ceiling deadline that's coming up in just a couple of months, and if they can't come to an agreement on the debt ceiling, then it seems to me that would be a real problem for the markets.
It depends on how long something actually went on and whether or not there was a confidence issue within the market itself. These things have to be sustained for a long period of time, and by that I mean 3 months, 6 months, not a month or just some temporary.
But a debt ceiling crisis is when the government can't pay off its bond investors. That only takes a few hours or days to really sink.
That seems like a boy who cried wolf scenario as well. We always go up to the cliff on the debt ceiling, and usually we end up, raising it, which people assume we're going to do again.
Right, but we don't go over the cliff. The question is whether the environment is so toxic in D.C. right now that
the question really at the end of the day is the crisis one that's going to be sustained? And if people believe it's not, and they are able to, if you take a look at the market today, we're 394 days without a 5% decline in the S&P. You've got a huge amount of momentum, so it's going to take a lot for people to take something like that and actually react.
In that respect, is this good news? Does the market need to lose a little bit of steam because it's just getting so overheated
at some point?
Yeah, my feeling is that people's complacency is an issue, and that the market will have its downturn at some point. But for the next 18 to 24 months, earnings momentum is going to be the story in the U.S. It's going to be the story overseas. If markets were to go down 5 or 10% in this environment, that'll probably be a buying opportunity, and that's probably why it's not happening.
We got to go, but you like our market better than those overseas markets, or is the reverse true?
The reverse is true right now. The discount overseas is significant, about 35% emerging markets to develop. So we want clients to be moving money outside of the U.S. and maintaining the amount that they have in the U.S.
Thank you, David. Good to see you.
You're welcome. Good to see you.